Hey, babe.
Yeah.
What's Ethereum?
So Ethereum is a general purpose blockchain. So unlike other blockchains like Bitcoin, for example, that are just designed around one application, so the way that Bitcoin is designed around digital money, Ethereum is an open platform that allows people to build their own applications on top.
So that was the founder of Ethereum explaining what Ethereum is. And in my opinion, Ethereum also happens to be one of the best investment opportunities potentially of the next decade. An investment opportunity that could rival AI. And in this video I'll explain why, and it's due to a few mega trends. For years, cryptocurrencies have been heavily criticized for being overvalued relative to the utility they provide. I think at times this has been a very fair criticism, but one interesting opportunity presents itself now, and that's Ethereum, where I believe the price is now undervalued compared to the future value it will bring to the world. Much of this value will be driven by two key mega trends, or basically the killer apps of the crypto world. So the first killer app is tokenization of real-world assets. This involves converting traditional assets like gold, stocks, bonds, and other assets into digital tokens that run on the blockchain. This comes with a lot of benefits. The benefits include it's a lot faster, cheaper, and more transparent to transact. And major institutions such as Robinhood, BlackRock, Deutsche Bank, JP Morgan, and many more are already participating by tokenizing assets. This trend is expected to accelerate in 2026 and beyond. The SEC chairman Paul Atkins believes tokenization will happen very rapidly over the next few years.
Do you expect this is where financial services is going? Are the major banks and the brokers out there today moving increasingly toward tokenization?
Oh, absolutely. And it's the way the world will be, here in the, maybe not even in 10 years, maybe even a lot less time, maybe a couple of years from now. So I think that all of this modernization of the markets, I think, is good. And the trouble that we've seen here over the past few years is that the SEC, unlike historically, it never was necessarily at the vanguard of pushing new innovations. It was always a little bit behind the market, of course. But here recently, it's been almost standing athwart the marketplace, and as it's as all these new innovations were coming about. So that's no more. We're actually embracing it, and I believe that we need to be embracing it to keep the United States at the forefront.
And this is a market of well over $100 trillion worth of assets which are waiting to come on-chain. So the second megatrend is stablecoins. Stablecoins are cryptocurrencies pegged to stable assets. Typically, the United States dollar, it would have a one-to-one backing. One United States dollar stablecoin would be backed by, at the very minimum, one United States dollar in real life, hence making them a stable coin. So these play a crucial role in facilitating the whole tokenization process and modernizing the traditional financial infrastructure of the world. Scott Bessent has said on multiple occasions that he believes the stablecoin market will grow exponentially, reaching between 2 to 4 trillion in the next few years alone.
Stablecoin legislation backed by U.S. Treasuries, or T-bills, will create a market that will expand U.S. dollar usage via these stablecoins all around the world. And I think that 2 trillion is a very reasonable number, and I could see it greatly exceeding that.
So, how is this relevant to Ethereum? I'll play a recent clip from the Bankless podcast where Joseph Chalom from SBET talks about the relationship between Ethereum's price and the assets on chain.
Acquiring a whole lot of ETH at this point with his treasury vehicle. And there are a number of other treasury vehicles, but let's start with why Ether, the asset. And you called it a little bit earlier, high octane money. Can you describe why is Ether high octane money? Describe it for maybe in simple terms, I suppose, for institutions. How should people think about Ether, the asset, and why is it attractive to put on a treasury balance sheet?
Sure. So rather than start with a view of what the price of Ether will be, what I'd love to do is maybe give you a fundamental framework to think about how the value of Ether can change over time. And what I want to do is, refer to an amazing consensus report. You can almost call it the industrialization of Ethereum or the trustware report. And I would encourage everyone to read it. And there's a bit of a framework that if you look back over the last 5 years, there's a high correlation between the value of Ether, the token that's securing Ethereum, and the value of the underlying assets, high quality liquid assets that are secured on Ethereum. And what do I mean by high quality liquid assets? I mean 3 categories. Stablecoins, where Ethereum has the majority of all stablecoins issued and running on its chains, is number one. Second is tokenization of real world assets. And the third is the slice of DeFi that is real world activity. I mean, borrowing, lending, and exchanging of capital. So high quality TVL. If you take a step back and look at how that has grown over the last 5 years, there's almost an uninterrupted view that for every $2 of high quality liquid assets secured on Ethereum, there's about $1 of appreciation in the market cap of ETH. And I'm not suggesting that as it goes J-curved, that correlation will continue to be linear, but I'm suggesting there's a correlation. So if that's your framework, then you could look at each of these pools of assets, stable coins, 275 billion going to potentially 2 trillion over the next few years. Tokenized real world assets going from 25, 30 billion to some much larger multiple, potentially measured in the trillions. And then if you look at the institutionalization and adoption of liquidity on DeFi, and I'm talking again, lending, borrowing, and exchange of value, those 3 things, if you look at what some of the experts are saying at Boston Consulting Group, that over the next several years will get to $4 to $16 trillion. So if you take a step back, just think about, you asked for simplicity, a simple rubric that if these high quality assets are secured by Ethereum and the L2s that derive security from it, you can put your inputs in and it'll give you an output. And in any forecast, that output of what the price of Ether is going to be is significantly higher than it is today.